We are back to close out another week in the financial markets. We're going to be talking equities. We're going to be talking crypto. We're going to look at a big week coming up next week for the FOMC, for earnings, for economic data, all that good stuff. Before we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. I'll do this again because that's how you know it's not financial advice. We are not financial advisors. We're a few guys who love following the markets. So please do your own research before making any buys or sells. Kevin, we are recording this Friday morning, right before the markets open. We see futures are trading up a little bit. We have it in tech. We have it in the Dow. Everything's kind of up as we, had a pretty rough day for the markets, for tech, at least yesterday. The Dow is on his best winning streak in years, absolutely crushing it. What are you seeing as we begin this last day of the trading week and we move into a pivotal end of July?
Yeah, absolutely. I mean, I think a lot of what's happening with the Dow is a lot of people are transitioning money over from the NASDAQ to the Dow because they see how overbought the NASDAQ is. I think that's what we're seeing a little bit of right now. The Dow, we saw a ton of resistance around that 34, 3 level. That was something that we just kept on hitting our head and asses on. Finally broke through, so I'm not surprised people are starting to put some money in that, just defensively, because there's probably a good chance that some of the earnings next week aren't as rosy, or even if they are, we've seen what happened with Netflix and Tesla. So we really are probably in a place where we're going to be a little bit more defensive going into next week. So yeah, I'm not surprised that the Dow's had this winning streak. I'm looking also at crypto. It's been kind of consolidating, but that's pretty much for the most part what I've been seeing. TradFi is just wild right now.
Yeah, when we talk about positioning defensively, that's usually companies that are part of the Dow, right? We have Walmart, the Home Depots, the Lowe's of the world. Those are traded, as part of the New York Stock Exchange in the Dow Jones Industrial Average. So that has been leading to a big run there. We may see a rebound in tech today. I want to talk because we're not going to be back live until probably after the markets close on Monday. So I want to do our, weekly preview a little bit early. I want to do it today. So next week is a huge week, like a very, very big week. And not just the numbers, but kind of the underlying, tone of everything that we're going to see. So on when it starts up on Tuesday, but things really kick into gear on Wednesday. So we have the next FOMC rate hike decision on Wednesday, pretty much locked in. It's going to be 25 basis points. The question is, what is the tone from Jerome Powell? Is it that this is probably our last hike, or is it, there's still more to come? I'm seeing a lot of people and a lot of allegedly really smart people, economists for Deutsche Bank and, all these other major institutions saying that this is probably the last rate hike due to the fact that they're seeing inflation cooling. I don't know what data they're looking at, but if we go with the data that the Fed puts the most weight into, which is core PCE, that has not been cooling. That has been staying, that's just flatlined. And so we really do need to see that number come down. Now, we get that next data point on Friday after the Fed meets, which is going to be pretty fun. So, like I said, we have the Fed meeting on Wednesday. On Thursday, we get the first GDP reading for Q2. So, are we starting to push into a potential recession? That number will come out. We'll kind of get the first reading there. And then on Friday is the big day for data. We have personal income, personal spending, PCE, and core PCE. That core number, it's been ranging, but it's just been stuck, like I said, in that 4.6 to 4.7 range. We need to see a meaningful move down in that number. And I'm not talking like 0.1. Okay. I'm talking like we need to see that at like 4.2. Because if all of these people are expecting that we're going to see inflation, PCE in the low twos by the end of next year, that move is going to have to come at some point. Okay. It can't just be 0.1, 0.1, 0.1, because that's going to take for fucking ever to get there. So we need to see that number start to come down. And if it's still stuck in that 4.5 to 4.7 range, that's terrible. And that to me says that this market is going to sell off hard. We also have a ton of earnings next week across a lot of tech, consumer spending, all of that stuff. So we get Microsoft, Google, Amazon, Facebook, Visa, Louis Vuitton, ExxonMobil, MasterCard, Samsung, Coca-Cola, McDonald's, just to name a few. There's plenty others. So we're going to have a lot to look at, both on the results that have happened, but also what their expectations are for the year to come. And something I want to talk about now is from American Express and their earnings. They brought up that they saw their highest revenue month ever.
Yep.
And card member spending is at an all-time high for them. they also noted that millennials and Gen Z represent 60% of their new signups. So what I have to begin wondering is, different generations value different things, right? Like my parents, and it's kind of like, who were you raised by? What do you want to spend your money on? Like my parents were raised by those who were, had families in the Great Depression. So you never threw out anything. You kept everything. People these days, like myself, younger generations, they don't want as much stuff. They want to spend on experiences. They are not buying homes because A, they're overpriced, but B, maybe that's not aligns with what they really want. So and this is not a question that we can answer in just, 5 minutes today, but like starting to think about how this generation, as they move forward in their lives, as the millennials start to kind of as the baby boomers start to kind of go by the wayside, and that generation shrinks eventually, what does that mean for markets? What does that mean for spending? How does that impact the economy? I just think it's an interesting thought exercise that I personally need to play through to figure out if my investments are in the right place, because that impacts the housing market, that impacts equity pricing, all of that stuff.
Yeah, I mean, that's a pretty heavy question to be bringing
Yeah,
up, but I think we've seen a little bit
especially
of.
this early in the morning.
I know, man. Let me. I might need a bump before I can answer this question, but I'm joking. But this generation definitely does value things that they can't necessarily tangibly have, right? It's we've seen a lot of things where they spend it on experiences, like obviously traveling is something that millennials and Gen Z love to do. But we also have seen it in the past like 20 years, right? Like look at iTunes, look at digital music, look at digital films, like streaming services. We've seen a lot of things where people aren't necessarily buying things that they could have as technically an asset and sell later on. A lot of it has become, okay, I have this and now it's digital property of mine. It doesn't take up space or anything like that, but it doesn't have the same value as something that you could potentially resell, right? So for me, I think that one thing is that this generation might not be as willing to purchase assets that could make them more money in the future. That doesn't necessarily mean that they're gonna not buy crypto or buy stocks and stuff like that. But vehicles they might not be as willing to purchase, and eventually offload at some point. We all know that obviously cars can be a pretty great asset if you're going to offload them, especially if you have something you can work on, make some money on the back end. Houses, I don't know if everybody in this generation between millennials and Gen Z can afford a house, like we just said, or even properties that they could potentially be landlords and stuff like that. So I don't necessarily think that's we're in a place where they're going to be forward thinking to buy stuff like that. I could be wrong. I think that there is a good portion,
And it's
but
interesting too. It's like, do they want to buy a house?
exactly.
Right? Like, do they want that responsibility? Because I mean, let's be honest, as we get more advanced, people in younger generations are less and less, likely to do things on their own, want to, do home projects, want to fix things. Are they just going to be like, you know what, we're fine renting because that's just one less headache for us. We don't have to worry about a mortgage and taking care of the yard and fixing shit around the house. Like, I think it's a very real possibility. I think that could, I think eventually we are going to see the housing market take a big hit
Oh,
just due
yeah.
to the fact that demand, like, is going to go up some, but I think supply is going to increase as we see all these housing starts, as we see the baby boomer generation. A lot of like my parents and pretty much everyone of their friends, they still live in the house like where their kids were raised. Like they don't have a mortgage payment. Why would they worry about that? Like at
Right.
some point, there's going to be a lot of supply coming onto the market, and will the demand outpace that? I'll look into the numbers, but like let's be real. Like there are not near like the birth rate is not as high. There aren't as many families. Like people in my generation, your generation are much more likely to not have kids, not need to have a house that size to raise a family. And so like there's going to be a really high supply at some point. It's going to be an opportunity for those who want to buy a home, I think, to do it. It'll never be like the baby boomer generation, their opportunity, but it'll happen. Home prices will come down at some point, but it's
The
just kind of
question
an
is,
interesting one that I started thinking about from these Amex reports.
oh yeah, absolutely. And it's kind of again, it might be even worse too, where the housing market collapses if unemployment goes up, right? Because then the people who do want to buy a house can't necessarily afford one. That's going to be a really interesting thing to see if that plays out. I still think unemployment is going to rise at some point. When, that remains to be seen. But obviously that's going to offer tons of opportunities to, acquire assets that will go up in value. I mean, especially if you're buying at the bottom, right? Definitely different regional housing markets are going to be affected differently based on whatever we are going towards. I'm not going to say recession, but recession. So we'll see how that plays out. But yeah, it's really interesting to me. But it's also like we're getting tons of credit card data back, and we've seen some negative reaction to the stock price, and we're seeing a lot of like obviously American Express did pretty great with signing up new people and people spending money at an all-time high, right? This is it's pretty impressive, but it's also scary because what have we been talking about for the past 9 months? You and me been talking about consumer credit, right? There is a credit event coming. I don't care what anyone says. This is going to be the thing that's going to blow everyone. Oh, it's going to be the biggest blow, I think, to the economy. I think it's going to be a credit event. But
I mean, look, we had was it Discover
yeah,
had their earnings.
two
We
cards so
have
far.
we got Visa and MasterCard next week. So when I say like looking at the numbers for the earnings gives you some insight into what has happened.
Mm-hmm.
Looking at what they're saying and what is being said on these calls is much more important for us when it comes to trying to figure out where we want to position in the future. Because if we see from a lot of these companies, like that's why I think looking at the Visa and MasterCard report next week and what they say around defaults, around people just like cutting back on their payments and only paying the minimum compared to paying off the full balance of their card, like that's showing us the cracks in the foundation right there. So I think it's really important to look through some of the stuff and see what are these companies, because we have been so far on this, like, hey, we got to keep focus on consumer spending and debt. Are people spending more on their credit cards, and simultaneously, are there more defaults on those cards? That is a huge indicator for what we can expect in the future.
Yeah, I mean, I'm really excited by credit right now. I think I've had so many things throughout this entire bear market where I'm just like, oh, this is fucking wild. This is insane. Obviously, energy is one that I'm really keeping an eye on right now, but credit's also one too, because it's going to be something big that's just going to absolutely say, all right, this is the end of the bear market. This is what we get for 13 years of just being stupid and buying everything. It's coming. But yeah, I just want to pull up this real quick because people don't necessarily ever learn from their mistakes, and obviously, stock market is cyclical in times, and a lot of things repeat. But I just want to pull up this. I looked up at American Express. Obviously, they're down a little bit today, but this is they opened up just right now. But this is a while. This is a pretty big gap. This is from 109 down to 98. And then also a small little gap here, and there's probably some smaller gaps somewhere on the smaller time frames. But when I look at this compared to where we are right now, I'm not saying it's going to happen, but that's a pretty big gap. We've been seeing these gaps be filled, right? We saw Netflix go all the way to the top. We saw Tesla fill those gaps all the way from the past 6-7 months. So keeping an eye on these things, like looking for these gaps, does tell me that there's liquidity in certain areas. I'm not saying it's going to go down 41% tomorrow, but I'm saying that if something bad does happen, it's not off. It's not too far off of history's path that this could drop, in the range of 40 to 60%. We can look back at 2008 if we want to be assholes about it. And 2008 right here, look at that. Woo, that's a big boy drop. That's from, let's go from here. We'll go from April 2008 just because it's part of the drop down here. I mean, that's 82%. Now, is it going to drop 82%? No, but I do think that 41% isn't as crazy when you look at it in perspective to 2008. So keep an eye on stuff like this. There's a lot of gaps that are on here from the macro because obviously we're oversold and pushed up real quick. But I don't see a place where a lot of these credit card companies, a lot of these ones that are leveraging tons of debt or dealing with debt, especially consumer debt, don't retrace at some point to areas where they jumped too high, too fast from. So that's just something I want to pull up with American Express real quick.
Okay, good deal. We can kind of move through things. So I know that today we have $4.2 trillion in options that are expiring for the stock market. So that is going to definitely lead to some potential volatility as people, people close those out. Who is going to be impacted the most, I think remains to be seen, but I have to imagine some of it is in the tech sector for sure. Anything, we're going to keep today's show a little bit shorter. Anything that is really catching your eye in crypto, I see Dogecoin is having a nice day because of course it is.
In a bear market.
Yeah, I mean, whatever. Anything else that you want to look at on the charts? We kind of gave our preview for next week. It's looking like it could be, with the options, it could be a volatile day, but also it could kind of be a ho-hum day as well. So what catches your eye that we can kind of, go through quickly?
Yeah, absolutely. I just want to pull up the DXY just because this is something that we always focus on, and the DXY has been on a 10-month down sell, right? Or downwards trend. Down sell wasn't a word. I just made that up, I guess. But yeah, from September 2022 all the way down to where we are currently, we are about 13.5% down. Not great. Obviously, the dollar hasn't had much of a chance with inflation coming down. Inflation at 10% was fucking great for the US dollar. Now, here's the thing. I think that it's completely oversold. And I do think that a lot of people that are shorting the DXY, expecting it to go lower than 99, maybe to 96, 95, around there, I think they're going to eat some shit. And just be honest with you. I think that a lot of people are counting the dollar out and they're underestimating a lot of things that are going on in the world. And you can't just look at the dollar and say, oh, the dollar's a shit coin. I'm going to buy Bitcoin right now because it's at closer to 30K. That's a stupid I'll be honest, that's just a stupid mentality. You have to look at everything in a global perspective. There's a lot of stuff going up in Europe. Energy is something that's going to deeply affect the dollar. And I think a lot of what we're seeing today in this options expiry is definitely going to affect the dollar too, right? So if these options are coming in bad, people are going to start moving to the treasury bills. They're going to start moving to, the US dollar, DXY. They're going to start going long. I think there is going to be some point where we're going to be looking at the dollar and it's going to be a lot higher than where it currently is. So on the daily, yeah, it's, finding some support down here at 99.663. And we're currently at 100.994. So we bounced right off of that, which is great. I'd love to see it. The weekly close is today. So we're going to see how the dollar reacts to it. We bounced off the 200 EMA. It's wonderful. I hope that we're going to be oversold by the end of today for the DXY and the stochastic RSI. I mean, it hasn't shot up too much. I don't think it's going to rebound instantly. It's a V-shaped recovery on the stochastic. I would hope that it would come all the way to oversold and maybe we consolidate here for a few weeks, maybe into August, September. Again, I'm not, even though the dollar's just kind of like doing this right now, I wouldn't be too scared with it because I do want to go back in history for a little bit. I just went back in history with American Express, but let's go back to 2008 and see what the dollar did, because it's pretty impressive and it's also kind of lines up with one of our targets that we're looking at. So down here is July of 2008. So currently that's where we are, but 13 years ago, right? Or yeah,
15.
15 years ago. Man, I'm terrible at math. Why do you guys listen to
Math
me?
is hard.
Math is so hard. So 15 years ago, this is where we were. We're going to go up all the way to, we could say the height of this, which is March of 2009, which is the end of the technical bear market that we saw for, at least for stocks. That was the bottom, and it was up 25.25%, right? That's a pretty good move. And we saw that it was kind of just on this trend down for the longest time. Like, this is insane how much it's going down. And let me see if I could get this from there to there. Let's see. It's like 25% too. So not too, I mean, different situations for where we were, but this is a 25% move up from, to July 2008 to March 2009. And okay, get out of here, ruler. And then if we go to where we currently are today, we're going to look at something on the charts and we're going to see this white line up here. This white line is 122.465. This was a target that I had from months ago, probably pre this show. But, obviously this is 20. Let's go from the bottom of the move. That's what I did with the other one. Down here, this is 22, 23% right to the level. I think this is a huge level of resistance for the dollar too. So we'll see. But 25% from where it currently is, that's $25 on top of the index. So I mean, it's not impossible, but it's just funny how it lines up with that 122 range. So when I see the dollar right now being completely oversold on the monthly, completely oversold on the longer time frames, I do think that we are coiling up for something that could potentially push the dollar straight up. What could that be? Probably anything outside of risk assets going up. So I would keep an eye on the dollar. I think a lot of people that are counting it out are going to be sorely mistaken. Same thing with the VIX. I think the VIX is waiting for its day to shine. I'm not giving up on the VIX either. Maybe it still goes a little bit lower, but eventually the VIX is just going to explode, and it's going to be painful for anyone who was shorting that as well.
Yeah, I mean, once equities start to come back down and there's fear in the market again, the VIX will go up. Like, it's just how it's correlated. So,
Yeah.
Anything on the crypto charts before we wrap it up today?
Yeah, I mean, the only thing we should probably be looking at is Bitcoin, in my opinion. I'm looking at this right now. It's kind of a weird spot, right? Volumes are extremely down on the weekly. We're in this supply range still. We're finding out that tons of whales are offloading their Bitcoin. You could see it anywhere on Whale Watch or any of those Twitter accounts, you can see all the supply entering the exchanges. I think this morning I saw like $400 million worth of Bitcoin was moved from wallet to wallet. So eventually that's going to be distributed. Some people are saying that that's the US government selling some of the Silk Road Bitcoin. Who knows? They tend to like just dropping everything on the market at one time. But, I'm just going to keep an eye on this. I think we're seeing tons of supply enter the exchanges. Now, with all that happening and us being in the supply zone, this could be it. This could be the top put in right around 31, or what was it, close to 32 or something like that. No, it's right here. So that's roughly 31,804. That could be the top. But at the same time, I do think that we're not too far off from the supply range. I mean, this 34, 35K. So I do think that it's possible that we do get a wick into that still. The question is, where do we close on the weekly and where do we open next week? Obviously, Sunday is going to be where most of the volatility is. But then when I look at the daily, I can see that we're extremely oversold on the daily. I mean, we're at 0 and 0. I mean, they can only really go up right on Stochastic RSI from there. So I would anticipate that would be pushing up somewhat. Now, is it going to be a fast move up here? We're going to get some bullish news that absolutely just takes crypto up here. I don't know. I don't know what's going to be for Bitcoin. It's been a really weird week for crypto. Obviously, Bitcoin's fighting to regain its dominance. XRP has been taking hold. We saw Link shooting up a little bit. So we just have to wait and see. And that sucks to say because we do need Bitcoin to kind of decide the direction of this market. Because, again, we're in this corrective pattern, right? We're closer to the top than we are to the bottom. And I mean that in this channel. So a lot of people that are saying that it's going to go down right here, right now, I counter that with saying there is nothing that's telling me that it has to go down right this minute. Maybe it goes down to 1,000, 2,000 at the most. But for the most part, I think that, man, as long as we stay up high in this distribution and people are willing to buy, 30K and people are willing to sell a lot at 30K, we could stay here for maybe another month or so. So I'm definitely not giving up on Bitcoin going to 34, 35K. I think that just liquidity needs to be tapped, especially if a lot of shorts start piling in. I'm not seeing tons of shorts piling in at the moment. So that's kind of why we're staying neutral. But it sucks to say, but just you got to sit and wait and see how this one plays out. It's a terrible thing to say. I know you guys want the answers. I want the answers too. But that's what I'm seeing with Bitcoin. I think we're going to probably break up out of this if, depending where we end the week on the close, but I think there is room to the upside on the daily. If we're looking at the macro, we're getting close to the point where we're going to be coming down soon. You can see we're overbought on the weekly almost, not quite, but there is still room to the upside if Bitcoin really wants to push up. So that's what I'm seeing. I think it's going to be a wick up, and then that'll be the end of it. But we need to see dominance come back. We need to see some of these alts start to kind of relinquish some of their power to Bitcoin. So nothing too crazy with that. Just watch the weekly close. There's going to be a lot of volatility in that last day. So Sunday night, that's where we're going to see most of the moves.
All right, patience, right? Especially now, it's very important to be patient. This market is a tricky bitch. It's a tricky bitch. So as soon as you think it's going to do one thing, maybe it does another. So stay patient, my friends. Don't overextend yourself. I don't think anyone watching this show is in a position to move markets. So just give what the market takes you, right? Yeah. Like no more, no less. Don't try to get fancy here. We're in this for the long haul. So that's going to wrap it up for today. Appreciate everybody for watching. Once again, hit the buttons down below. Like, subscribe, drop a comment, share us out on social media if you enjoyed our show today. We really appreciate that a ton. We'll be back on Monday, a little bit later than usual to kind of wrap up the trading day, but big week ahead. Very excited. I think it's going to be a lot of fun. So thanks, everyone. Have an awesome weekend, and we'll see you next time.
Take care, everyone.